before starting, so let me thank you very much for attending this presentation. And as I'm used to do, let's make a quick audio and video check. Do you see my screen and my PDF page, and do you hear me well? And I see that some Max will answer anticipatively because they know that my habits. Okay, a lot of yes, thank you very much. That's really nice. Okay, just before starting presenting the concept of the Max, allow me to present myself very quickly with a few words. You have most probably recognized with my accent that I'm not an English or an American citizen. In fact, I am a Belgian trader. I live most of my time in France, but sometimes also in Belgium. These last years mainly in Belgium. And I am now a full-time trader since 2008, in fact. And I have the privilege to be a Max instructor since 2009, mid-2009. But in fact, I'm trading and investing for many more years. My experience in trading in many markets, the stock market, the option market, the futures market, and of course the forex market, lasts for 32 years now. I am a former software engineer, having worked for about 27, 28 years in the IT industry, and I have had the privilege to work the last 15 years of my career in that profession in the banking industry for big banks in Europe. And so this has given to me the opportunity to be in contact with bank traders trading the money of the bank. And so this has given to me the opportunity to see some, not all, but just some of the tricks the big boys are using in the market and how they analyze the market to define opportunities to trade. And so you will see that this is important later in the presentation and in the Max courses. What I'm going to talk today about the Max is what the Max trading system is, the main concept of the Max. I will illustrate them with some trade examples, and I will just mention the money management aspect we have with the Max. And then I will give the mic to my friend Chris. So the Max trading system, and I will talk about it as the Max in the future, has been created by late Dr. Jim Pruitt, called with affection by his student as Tiger, because he had a very strong temperament. Strong temperament because his aim was to share his knowledge and experience with his students as fast as possible, because he knew his time was counted. And so he started to teach the Max in 2008, and unfortunately he passed away in 2009, in mid-2009 in fact. The aim of Jim was to give traders a very powerful but also very reliable and flexible trading method. And I say method instead of systems, because the Max is based on concepts and rules which take into account the different market conditions. With the Max, we must be able to trade under any market conditions, and so the rules are not fixed and rigid, but must be adaptable to these market conditions. Of course, because it is a complete trading system, there are two keys which are very important to be successful with the Max: work and commitment. It requires a lot of work and a strong commitment to master the Max and to be successful with the Max. Work, indeed, it is not just enough to watch one time the video course, the recorded video, to just be sure we master the Max. It requires a lot of commitment, a lot of exercise, practice, in order to be sure that the concepts are understood and the rules are applied correctly. And commitment, if your objective is just to make money for the money, most of the time you will not succeed, you will fail. You need to have a stronger commitment in order to sustain the necessary effort in the work to become successful with the Max. But there are also other keys which are important, or skills which are important to develop. discipline, patience, persistence, concentration, and confidence. Discipline and patience seems obvious indeed, because I have said we apply rule, concept and rules. We must stick to these rules. And patience, a rule represents a set of conditions which must be fulfilled, and so we need to wait with patience that all the conditions are fulfilled in order to apply that rule, an entry rule or an exit rule, or sometimes a stay rule, a doing nothing rule. Persistence also is very important. Very often traders jump from system to system after a few losing trades. But with the Max, we teach that we may face losing streaks, whatever the trading system we use. And the length of these losing streaks are way longer than many traders can think. And so after a losing trade, 2 losing trades, 3 losing trades in a row, it is important to continue trading based on the concept and the rules until we face a more favorable situation. And so this is persistence. We don't try to overguess the issue of the next trade, trying to avoid a potential losing trade. Concentration. I have said that it requires a lot of work to master the Max, because one of the points of the Max is it contains a lot of details. And so when we are trading live, it is important to stay focused, to stay concentrated on what we are doing, observing the chart, analyzing the chart and the situations in order to make good decisions. And so out of question to be distracted by other things which have nothing to do with trading. And confidence. We need to develop confidence in the market itself, which provides us with a lot of opportunities day after day after day. We need to develop confidence into the Max itself, in its ability to catch most of the trends the market can develop, and confidence in ourselves, in our ability to apply the Max rules. And so what is the Max? The Max is an acronym which stands for 3 important concepts. The M stands for momentum. We want indeed to open a trade when the momentum is present in the price action, and we will consider to close a trade possibly when the momentum is exhausted. The A stands for acceleration. Once a trade is opened and a trend is unfolding, we want to optimize. This means to increase the profits we can extract from that trend by progressively building a larger position, by adding to the trade. This is what we call the acceleration phase. Of course, doing that, the consequence may be, if we don't pay attention, to increase the risk of the position we are handling. And so the trade risk management is a very important aspect. In the Max, we need to keep the risk under control, and a strict control. And the X stands for exit. At some point, we will have to make some scale out. So this means we will close partially our trades, several times eventually, and at some point when the trend seems to be exhausted, because we are never sure 100% of the time when the trend is really exhausted, we will make a final exit, closing all the remaining open position. And so mainly the Max is a trend following method. We want to trade trends. This means that we have also to define what is a trend, and I will illustrate it with some example in a moment. With more advanced level of the Max, we can also trade counter-trend movement and consolidation area, depending if the conditions are appropriate to do so. And as I have mentioned, we have within the Max a very strict risk management rules and very strict money management rules. These are 2 aspects which are as important as the trading methodology itself. And as Craig has just mentioned a few moments ago, the Max can be traded in any time frames, in any market. The futures market, the currency market, the indices, the index, of course, the indices, the commodities, the stock market, and if we can trade stocks, we can trade also options if the corresponding stock is optionable. If it is important to understand what the Max is, it is also important to understand what the Max is not. The Max is not a scalping method. We do not try to catch a few pips in the shortest period of time. We consider that scalping, this is my personal opinion, I consider that scalping is the most difficult trading system, because we are facing big boys who knows all the tricks of scalpers. The MAX is not a news trading method. So we don't try to catch these nice spikes the price are doing when we have a news release with a surprise. If you try to trade these movements, which last a few seconds to a few minutes, most of the time you will get very, very bad price executions. And so we can trade the news, but before the news or after the news release. And I will again illustrate an example in a moment. And as I have said, the MAX is not an elementary buy and sell system with rigid rules. The rules must be adaptable depending on the market conditions. And so we define our decision as setups in the MAX. And in fact, a setup, or mainly an entry setup, is always an opportunity which is based on three kinds of conditions. We always need to see all these conditions being fulfilled. We have technical conditions based on technical analysis. This may seem to be the most important aspect of the MAX, but in fact it is not the most important aspect. We have risk conditions. The risk must be appropriate in order to decide to take the trade, and we need to have the appropriate global context. This means that the trade we consider to take when all these conditions are fulfilled must be in agreement, of course, also with the global context. And the global context represents all the fundamental factors which may affect at any moment the currencies or the price of the different pairs. The exit setups are, on the contrary, defined as risky situations for the position we are trading, for the trade we are handling. And we have several types of exit conditions. We have exit conditions based on technical indicators. We have exit conditions based on pure price action behavior. We have exit conditions based on a combination of technical indicators and price action. We have also, and this is very important, exit conditions based on the timing aspect. All the moments in the day during the days are not made equal. There are moments in the day which are more appropriate for exits. And we have also exit conditions based on what we call in the MAX movement invalidation. In fact, we can define in the MAX when a trade makes no longer sense, when the movement we are trading makes no longer sense. And if this is the case, we have to close the trade. And so this is what the MAX is, in fact. And let me show you what kind of result we can expect with the MAX when you apply these concepts and the corresponding rules you will learn in our MAX courses, of course. This is an example of a trade this week. It was 2 days ago, last Thursday, on the Swiss yen, which is a moderate to high volatile pair. And that day, you see here with a vertical red line. This vertical red line corresponds to the Frankfurt Open, but also to an important news release on the Swiss franc. It was the trade balance. As you can see, or as you will see based on my explanation, the trade has been opened after the news release. The news release has not produced a surprise. And so in such a case, we can trade immediately after the news release. The second vertical line, the yellow line, represents the London Open, and later during the day here, the US Open. And so here we have, after the Frankfurt Open and the news release on the Swiss franc, a setup which corresponds, in fact, to the start of a new uptrend. You see here several moving averages on the chart. We use indicators, as I have said, technical analysis, based, for example, on moving averages and oscillators, like the STO RSI here. And we have a long trend, when the price moves above our home base channel, which is the long-term moving average you are seeing here in blue aqua. And we have downtrend when the price moves below that moving average. And so here we have an uptrend. To identify the beginning of that max trend, we need setups, and we have several types of setups identifying the beginning of a new trend. This is an example of such a setup, which is called the S&P MO. S&P means safe and perfect, and MO means momentum entry. It is called safe and perfect MO because it is the most reliable entry setup we have within the MAX at the beginning of a new trend, and it represents also an important moment in the trend when the big boys are operating massively. There are other setups corresponding also to a potential start of a new trend. And later during the trend, we will see eventually other entry setups corresponding to continuation of the trend or resumption of the trend. Once a trade has been opened, and the trade is always considered to be made of 2 units, whatever the size of the trade, we associate also a stop loss, and the combination of the size and the stop loss define the risk we have for the trade. We always consider that the risk must be a financial risk. This is why we use position sizing to define the trade size of our trade. Later on, once the price is moving, whenever we will see a potential risk for the trade based on the different exit conditions I have just mentioned a few months ago, we will decide to close half of the trade, 1 unit. Such a close is called a momentum exit or a partial exit, MX in abbreviation. And later on, when another exit condition will appear, we will make our final exit. We will close the second unit of our trade. You can observe that in this example, we have no scalings. We have simply 1 entry, 1 partial exit, and the final exit. This is what we do with the 2 first level of the max primer and the max light. The max primer is the most basic level of the max, and this is one of the courses we will propose to you today. And another one, an upper level of the max, but still a basic level, is the max light. The difference between the max light and the max primer is we have with the max light more entry setups, more exit setups. And so we see here in yellow the notations for the entries and the exit of the max primer, which has made for the 2 units a total number of pips of 28 pips. This means 14 pips on average for the entire trade. We use 2 units, so we have to divide by 2. The 2 units have the same size. The stop loss was 25 pips, and so the reward to risk ratio is 0.56R. This means that if you use, for example, a 2% risk for that trade, 2% of your trading account, this means that your return on your account will be 2 times 0.656, or approximately 1.1%. And in that up movement with the max primer, we had no other possibility to open a new trade. With the max light, however, we have, just after our final exit of the first trade, another entry setup appearing, allowing us to open a new trade called a re-entry, RE, with also a stop loss, in this case of 25. It was a coincidence, the 2 stop losses were the same. And then, while the price was moving, in this case upward, in the direction of our trade, we have had here an opportunity to close 1 unit based on a rule I have presented during our last workshop 2 days ago on the long bar. Here, a long bar is always an opportunity when the price retraces to close partially our trade, and then later on we have our final exit here corresponding. This is another kind of exit rule we have, one of the different type of divergences we may have between the price and our indicators. And so that second trade with the max light has made a total result of 86 pips. This means 43 pips on average for the entire trade, representing a reward to risk ratio of 1.72R. And so this means that the max light, as you can see this example, has more opportunities, and this will be almost the case, more opportunities than the max primer. By the way, there was another opportunity here for the last up movement of the trade with another re-entry here, an MX in this area and an XXX in this area. So, but these 2 trades between the Frankfurt Open and the US Open has made with the max light 2.28 Rs, almost 4.5% with a 2% risk. Okay, and what else here? We call our stop loss an ESL, an emergency stop loss, because in fact the ESL is not there to protect the trade, mainly the trade, but to protect mainly our trading account. We never know what may happen once a trade is opened. What is sure is sometimes we may face technical problems. For example, our internet connection crashing down. In such a case, we need absolutely to have a stop loss in place protecting our account in the case the price suddenly reverses quickly against the trade. And so this stop loss has the aim to protect the account in such a case. Of course, along the trade, when the price will move in favor of the trade, we will progressively adjust that emergency stop loss along the trade following our rules. And sometimes we will have a trade in a very risk-free situation, in which case then we can concentrate on optimizing the result of the trade. Now you can see the result. Remember the result, a little more than half hour for the max primer, a little more than 2 1/4 hour for the max light. Now the same movement traded with a higher level of the max standard and the max advanced gives completely different results. First of all, that entire movement, up movement, has been seen with the max standard or the max advanced as one single trade with several scale-ins and several scale-outs. Let's consider the max standard with my yellow notations. We have the same entry as the safe and perfect mode, the same first exit, and that at some point, because all the conditions were fulfilled, we had the opportunity to make a scaling to add to our trade. It is noted as C1, scaling number 1. And then we follow our rule for the exit and the scalings. At some point we have a risk presenting here for the trade because the price was making, for example, a retracement, and one or several of our exit rules have been fulfilled, so we make an MX, the MX number 2. We close 1 unit. With the scaling number 1, we have opened 2 additional units. Later on, we have the opportunity to open a second scaling, so we add 2 more units to the trade. And then an MX, we close 1 unit, and then we close another unit here, and then we close another units here, and then we have finally our final close. We have considered that the trend was exhausted and we had to close all the remaining open units. With the max standard, we were left with only 1 unit. With the max advanced consider more advanced concept to apply to our trade, and there are several types of advanced concepts like discretionary situations, like additional scalings, like being more aggressive in our position housing, better exploiting the news release, and so on and so on. And in this case, there were just a possibility to add 1 additional scaling here. That's scaling number 2. And this additional scaling, which was 1 unique additional scaling, will make a big difference. Here with the max standard, you can see that the total number of pips accumulated for the entire trade was 263 pips, representing a reward to risk ratio of 5.25 R. Remember, for the max primer, we had half R and 2.25 R. So 5.25. With the scaling number 2 here of the max advanced, that scaling alone has added 40-50% more profit, 371 pips, representing a reward to risk ratio of 7.4 R. If you take a risk of 2%, this represents a profit of almost 15% of your account, with a trade lasting just 3 hours. Yes, 3 hours. And so 3 scalings, 5 MX, and the final exit. So this is what the max standard and what the max advanced are. Another example was here with a short trend, a downtrend, the Euro Aussie. It was in last October. Same thing. The trend was already unfolding, having started way before the moment when an entry setup has been made here. And again, in yellow, you have the decision entries and exit for the max primer, and in white for the max light. So here the REMO represents a resumption of the trend. So it is an entry later in the trend. And then we have the same decision process. We have an entry, we have an MX, we have an exit. Then later on we have a second entry. It was also the same kind of setup, a REMO, an MX, and then an XXX. And here, and you can recognize a potential exit setup with a long bar, as I have explained. And then later, with the max light, another entry setup, a re-entry, a trade continuation setup with an MX and then a final exit. So 2 trades, short trade with the max primer, 3 short trade with the max light. More opportunities with the max light. And you can see also the kind of result, a little less than 1/2 hour for the max primer for the first trade, more than 1.2 hours for the second trade. Of course, we had the first 2 trades similar with the max light, then with the max primer, and then the last trade was a small one with 0.2 hours. Sometimes we get small results, sometimes we get larger results. But you can see that the result for the max primer and the max light using a 2% risk is or are decent results. Now the same movement with the max standard and the max advanced gives completely different results. So we will follow the same process. There were no specific news here influencing at least that pair. And so you can see here for the max standard the same kind of setup for the entry, a remo, and an MX, a scale in, an MX, another MX, another scale in, an MX, a scale in, an MX, an MX, and the XXX. So several scale-ins, 3 scale-ins, 7 MX, and the final XXX for a total number of pips of 210 pips compared to the pips made with the max primer and the max light. But most importantly, the reward to risk ratio is larger, 4.04 hours, 4 hours of profit. For a 2% risk, this represents an 8% profits. And in white, you can see the decision with the max advance. The entry was possible way earlier here in this area with more scale-ins and more MX. We have a scale-in 1, a scale-in 2, MX1, MX2, MX3, and all the other decisions are similar than the max standard. And so you may say, okay, your entry is just a few pips before the entry of the max standard, perhaps 10 or 15 pips. But these 10 or 15 pips or an earlier entry makes a big difference. And indeed, when we count all the pips of that short trade with the max advance, this represents an amazing 662 pips or an 11.85 hour, almost 12 hours as a reward to risk ratio. And believe me, with the way we adjust our stop loss and we manage the risk through the MX process, at some point in this area of the trade was risk-free, whatever the number of scalings we have added to the trade, several scalings. And so this is counterintuitive, but when you will take the course, you will understand why adding to an open trade with proper trade risk management is not dangerous at all. We need to control the risk in fact, and it's easy to do. And so you can see that the result with the max standard and the max advanced are way much important than with the max primer and the max light. A few years ago, we have developed another more advanced version of the max we call the Max ETF. The same movement with the Max ETF. The Max ETF allows to catch more opportunities, to catch more momentum movements, and so I will not, I'm just showing this chart to mention that the Max ETF exists. I will not go into too many details of this. Let me just say that we can enter the trade even earlier, and we may have more opportunities for scale in and for scale out, always with a very strict trade risk management. And here we generally increase the profit with the Max ETF by around 50% compared to the Max Advance or the Max Standard. You can see here 698 pips, a little more than our Max Advanced number of pips, 662, but the main difference was the stop loss was smaller. We have been able to take a smaller stop loss because the entry was earlier in that down movement, and because of a smaller stop loss, the reward to risk ratio is way larger, 19.4 instead of 4 or 12 hours. So this represents, if you take a 2% risk, almost 39% profit in just a few hours. So the trade has been opened a little after the London Open, around 1 hour and a half after the London Open, and has been closed a little after the London close. So a trade lasting a few hours. But anyway, worthwhile to make the effort for such kind of reward to risk ratio. So this is the kind of trade you can have with the Max. I have illustrated a small time frame, the 5-minute time frame, but of course you can use also higher time frames, other instruments. Here is an example of the silver contract in the 4-hour time frame. You see exactly the same kind of decision process with always an initial entry and then scale-ins and scale-outs until the final exit of the trade, and so you see the kind of result we can obtain with the Max, similar result whatever the time frames. This is an example of a daily time frame with the euro US dollar, and here I'm showing a portion of a trade with the Max ETF. So a re-entry here, a REMO setup late in the trend, but then we have been able to catch the remaining downtrend until almost the bottom here. The x-axis was a little higher than the bottom. You can see the number of scale-ins, 4 scale-ins, and the number of scale-out, 4 scale-out or MX. So you can see the kind of result we can obtain even in higher time frame. Personally, I like to trade the 5-minute time frame and the daily time frame. So in the daily time frame, of course, your trade will last longer. For example, here it was 65 trading days or almost 3 months. Well, with the Max, we have an average winning rate of around 75% and around 15% losing trade and 10% break-even trade. One of the biggest advantage of the Max is when we have a losing trade, the loss is always a small loss. And this is an example of a typical average losing trade. At some point in this up movement, we had an entry setup to open a long trade, and immediately after the price reverses against the trade. At some point along the movement, the down movement, we had an exit rule triggering here, forcing us to close 1 unit. We follow the rules, we close 1 unit. And despite that, the price continued to go downward, and at some point another exit rule triggered, forcing us to close the second unit before the price had a chance to reach our emergency stop loss. And then these 2 units have been closed with a loss, and the total loss was 41 pips, minus 41 pips, representing, because of an ESL of 47 pips, a reward to risk ratio of minus, it is a negative reward in this case, minus 0.44 to 1 or minus 0.44 R. So always a small loss. And on average, a losing trade will have a reward to risk ratio of around minus 0.5. Very often less, sometimes a little larger. It depends if we have made 1 or 2 scale-ins, for example. Sometimes with such a scale-in, the loss may be a little larger, but always a small one. And so you can see that through the previous example, the losses are always very small compared to the profits, which are way, way larger. And with a larger winning rate than a losing rate, you can calculate that the expectancy is very positive. I have said that the Max is applicable to any market condition. So we define what is a trending condition, we define what is a counter-trending condition, what is a consolidating condition. We define also what is a choppy condition, what is a choppy market. And another big advantage of the Max is when we have a choppy market, it's extremely rare to have a valid entry setup. Very often we'll have no valid entry setup. And so we are protected with the Max from opening a trade in a choppy market. However, sometimes we will have a valid entry setup. They are rare, but they happen. And so once such an entry setup appears and we have recognized that the conditions is a choppy market, we have the choice to either skip that trade or to take that trade. And when we decide to take that trade, we describe in our course how to handle such a trade in a choppy market in order to optimize the profit we can extract from such a choppy market. So, in terms of money management and compounding or uncompounding, you all know some Excel spreadsheets showing what kind of result you can get with compounding your result. I will go very quickly. You will get that Excel spreadsheet such that you can make any kind of simulation. But if you are able, taking a 2% risk per trade, to realize what is here my a 1-to-1 reward to risk ratio, so 60 pips on average per day, provided you trade every day. This will represent a 1-to-1 reward to risk ratio. Don't forget to divide by 2 because we always consider 2 units per trade, and then we divide by the stop loss. So this will represent indeed a 1-to-1 reward to risk ratio. You see here the result is 2%. So this means that if you are able to make on average a 1-to-1 reward to risk ratio per day, which is not necessarily easy, it is just enough to trade 2 months approximately to double your account. So in 2 months, provided you trade every day and you make a 1-to-1 reward to risk ratio, you may multiply your account by 2. Now, don't get me wrong, this is not necessarily easy because it's not obvious that you will trade every day. Some days you will make more profit, some days you will make less profit, some days you will have a loss. But anyway, it will take perhaps just a little more days to achieve your financial objective. And you can, with that spreadsheet, fix any kind of parameters for your trade and for your objective and see how many days you will need to achieve your objective. And so the Max courses are organized, in fact, in 5 levels. I have illustrated these 5 levels through some examples. The Max Primer and the Max Light course, which are the most basic level of the Max. The Max Standard course, which is our complete trend following system with the scaling technique and the scale out technique, and the Max Advanced course, which applies some more advanced concepts like the news release, like more advanced money management and trade risk management. For example, one of the things I teach in the Max Advanced course is how we can have a complete control of the drawdown, the maximum drawdown. And then we have the higher level of the Max, which is called the Max ETF. I have illustrated with one example, which goes more in details into the price action itself, and we exploit more momentum directional movement, in fact. And so what we propose to you today, as Chris will explain in a moment, are the Max Primer course and the Max Standard course. And so with the Max, whatever the level you will consider, you have in fact a very solid trading methodology based on sound concept. During the course we explain why this concept works in relationship with the big boys' behavior. The big boys are the big traders in the big banks moving the market. And during the course we focus on very important aspects like we use indicators in the Max, but we don't trade the indicator. We always trade the price action. The price action makes always the final decision in our decision process. And we have a very, very, very solid, strong trade risk management and money management, because if you don't consider your risk seriously, you will fail even with a high winning rate. And so consequently, we have a very high focus on the trade risk management. The first priority of a Max trader is always to control the risk, trying to progressively reduce that risk and canceling that risk. And so we focus also on the personal confidence development through several activities we have, our coaching and mentorship activity, the homework we assign after each session. Chris will explain a little more. The practice, we have practice sessions and some follow-up support activities we have as workshop, our forum, and our practice sessions we call scrolling parties. And so this is what the max is. So if you have any questions, feel free to post them in the question area. I see that Craig or Chris are answering them, and I will try to answer also them after Chris' presentation. And so now I have the pleasure to give the mic to Chris. Chris, it's up to you.
Thanks, Eusebio. Hi, everybody. Thank you very much for coming along here and sitting through this. I'll keep this side of things reasonably brief. Eusebio's gone through the process of the max in quite a bit of depth there, but like he said, if you do have any questions, let us know. As you can see on the slide, I'm a partner in the max trading system. This is our 52nd set of max courses. So we've been running them since around about 2008. Kind of took over when Jim passed on. And we have just creeping up over 1,800 members now, which is a really nice number. Slowly catchy monkey type thing, but we've been in this a long time, and we've got a good reputation. So, okay, enough of that. And I must say that this is the second time this year I've done a group presentation, so I'm a bit rusty. Next slide, please, Eusebio, as you will have noticed. Okay, what we've got on offer today are two courses, the primer and the standard. I really recommend that you go for the standard. It's our flagship one. It has all the entries and all the exits, and it will increase, I know this sounds like an exaggeration, but it's not. If you have a trend that you capture in primer, in standard, if it's say something like 40 pips plus, you can expect something like 30% to 300% increase in your profits as a result of using the standard, simply because we have ways of scaling into the trade really safely. And counterintuitively, the more that you scale into the trade, the less risk you actually have on the trade. And in fact, you get to a point where even if the stops get hit, you cannot lose money on it. The primer, though, is just like a regular trading system. It only has a couple of entries, whereas the standard has got 7, and the exits, there's about 4 or 5 different exits that Eusebio presents in the primer, whereas there's over 20 different exits in the standard. And we have so many different exits in order to capture the move. If you looked at all those charts that Eusebio's been through, you'll see that, excuse me, it's early morning here-ish, you'll see that most of the exits are very near the top or the bottom of the movement itself. And with the precision that the max gives, it requires a lot of different criteria in order to be able to capture those movements completely. The money management itself, while we bang on about it a lot, and it is incredibly important, is quite simple. It's just a natural thing that follows as you're doing your trading. So there's no massive calculations going on behind the scenes. You just essentially, once you've worked out how large your order is, you place the orders and take the exits as required, and the money management takes care of itself. So both the primer and the standard have got homework, and they both have access to the forum once it's finished, and both you'll be invited to the practice sessions, what we call scrolling parties, at various times through the year. Okay, so just to kind of wrap up, our courses are very detailed and very precise, and if we find a setup, whether it's an entry setup or an exit, then we execute that setup within about 1 to 4 pips generally. Sometimes even half a pip if the market's not moving that much. This is on a 5-minute chart, so we're very precise about things. The max doesn't necessarily have to work on the 5-minute chart. It can work on anything up to, well, any time frame. Dailies, I've been looking at the 12-hour charts, and they've been moving really nicely lately until Theresa May dropped her little bombshell. We use the MetaTrader platform, the MetaTrader 4 at the moment, to do all our training on. It's simple. There's no fees. There's no fee for the data feed itself. It's easy to set up. We've got a bunch of videos on how to do that, and we give you all the templates and the indicators that you need. So we keep things as simple as possible so that you can just sit down and start practicing the trading itself. Pretty much every other broker has got it. If you trading on Ninja or something like that, we've got indicators for that that's available. That'll be available for you after the course. And if we don't have them, then we can supply you with source code so that you can get your you can port our MetaTrader indicators across to your platforms. No charge on that side of things. We provide all the materials, the videos, the PDFs, notes, examples, pretty much straight after the course. Depends on, yeah, pretty much straight after the course. Yeah, there's not much more to say. You're completely covered there, and if you miss something, just yell out and we'll give it to you. Next slide, please, Eusebio. Thanks. Okay, so we banged on about the homework. That's really important. A lot of other courses will just give you the information. We give it to you and make sure that you understand it and do it, and so that it's actually yours. Once the course is finished, as Eusebio mentioned, we've got the Max forum. It's pretty quiet, but there's a lot of information in there, a lot of charts. And if you want to carry on submitting homework, you're most welcome. You can put it into the forum or into the carry on with the homework groups. Like I've said, we have practice sessions most weekends, and we also supply a thing called a news watch list, which tells you important times of the market to avoid so that you don't get hit by volatility. We're all about protecting your account as opposed to making profit. If you've got your account there and you're making a little bit of profit, there's no problems with that. But if you've got an account there and you keep getting hit by volatility because you're trading into a news event and you're losing money, then you're not going to make any profit that way. So the news watch list is available, and the end result of all this is that you get really good solid training, and you have a really solid trading method as well. You get as much support as you want. Trading is not easy, so we want to help you as much as possible. You just have to ask for information. And in our practice sessions on the weekends, you can send in a chart or whatever questions you like, and we'll do our best to answer them. And as Craig said right at the start, this will help you achieve your goals. Eusebio said, don't just aim for the money, but the thing is to have another goal that will take you there. So become debt-free, aim for your retirement, look after your independence, family, etc. And hi, Peter. Sorry, didn't see you comment in there. Okay, so what we've got available, the first course, and I do recommend this one, the Max Standard. It's got the profit acceleration, the money management, account protection. It runs for almost 2 months. So it's a long course, and there's a lot of detail in it. It is a lot of work. It starts on February the 12th. We've changed the days just in case you haven't noticed. I'll be running it on Sundays on the 12th. I actually take the course and do the training at 4 p.m. on Sundays. The reason for the time change is so that I get to trade through the week. Preparation for the course takes me a couple of days at least, and when it was running on Thursday, New York time, it would blow away my Tuesday, Wednesday, Thursday trading times. So it was, and there's more money to be made trading than there is training, regardless of what some of the trolls sort of put up in some of these situations. So I want to be trading as opposed to churning up all my time in the training side of things. Okay, the webinar normally cost, the course normally costs $2,999, but we have a webinar special of $2,399 going this week. And if you want to take the primer course, the light course, which adds an extra, say 3 weeks worth of training and gives you a couple of extra entries, or 1 extra entry and a couple of extra exits, you can get all 3 courses for $2,679. Okay, and on the Max Primer things, if you want to just see what we're like and get a taste, but not the complete profitability of the standard, the primer starts on February the 6th. It runs for 2 weeks, 6th and the 13th, on Mondays at 4 p.m. The normal price is $329. We've got a special on this for the next week or so for $159. This is just to give you a taste of what we're like. And if you just wanted to do the primer light, it's about 3 to 5 weeks worth of courses, giving you 3 entries. You can have that for $759. So those are the two offers, the Max Standard and the Max Primer. Next slide, please, Eusebio. So there's the whole thing wrapped up there. So if anybody has any questions about what we've done, let us know. Eusebio has got up the webinar discount page there, and Craig has told you that you can get an extra 10% on top of that. Thanks, Peter. And so some of the questions that have come being things like, what if I can't be present for the whole course? Or what if I'm working during those course times, like Sunday or Monday or something like that? And this is why we send out the videos. If you can make it present in the live session, then there's more urgency. If you can't make it at all, then a lot of people do the courses by video, so there's no problems with that. You still get the homework and everything else that goes along with it. It's just that you're not present on the live session, so there's no problems with that. And we always send the recordings out after the course within about 24 hours. Okay, I guess, sorry if I'm pronouncing that wrong. Can I use Max in C-Trader rather than MT4? I think somebody is trying to port our indicators over to C-Trader as we speak. I haven't seen anything come back to me. I've just handed the code out. So I can have a look and see if we have... there's no problems about using it on a different platform. Our indicators are pretty much standard. There's nothing unusual about them, and porting them is generally reasonably easy as well. So the answer is yes, you can use it in other platforms. And in fact...
Chris, when C-Trader has been launched, I think it was 1 or 2 years ago, approximately, there was a possibility to import MT4 indicators in C-Trader, so they are compatible. So I have tried and it works. So yes, the indicators of MetaTrader and the custom indicators are directly compatible with C-Trader, in fact.
Oh, cool. I didn't know that, Eusebio.
Yeah.
And what I was going to say also is that other people have got their own particular platforms as well. And what happens is they keep MT4 up for the charting and pick the trades up and then place their orders on their preferred platform. So that's another way of doing things as well. Okay, another question. Cool, no problems there. What if I cannot... Will this work with gold and indices and oil, etc., etc.? And what time frames does it work on? Over to you, Eusebio.
Time frame, every time frame, from the 1 minute time frame up to the monthly time frame, and any time frame you can define. For example, with MetaTrader we can define a time frame which are not standard time frame, like the 8-hour time frame, the 12-hour time frame, the 3-minute time frame. So we can use the Max in any time frames.
Okay, ciao Peter. And Robert has said that he's going to try out our NinjaTrader indicators. They should work. A lot of people have been using them, Robert, so I don't think you'll have a problem with them. How about monthly payments? Is a question more for Craig. So if you want to do a drip feed, Craig can come to some arrangement with you, but generally it's on a personal basis. I think that's about it for the questions, and nobody else has asked any others. And also, just a reminder that this coming Thursday, Eusebio will be running a live session with the Max, using the Max on the London Open, so 3 a.m. New York time. So if you want to see what we're like and get some idea of what Eusebio is like, and probably me, because I'll be around at that time as well, you're most welcome to join us and bring any friends along as well if you want. So thank you very much for attending. Trade well. Bye-bye.
Bye everyone. Take care.